Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, I'm going to be providing an update on EWG, Eat Well Group. This is a company I personally hold. I think it's extremely undervalued, and I'm going to talk about why in today's presentation. Before we get into it, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below what you think of Eat Well Group, their valuation, and the numbers we're going to talk about in today's video. Now with that being said, let's get into today's update. Okay guys, so that's right. Today's video, we're going to be providing an update on Eat Well Investment Group, trades under the ticker symbol EWG here in Canada on the Canadian Securities Exchange and in the United States on the OTC under the ticker symbol EWGFF. Now this is a company we've covered extensively on the channel, one that I'm personally invested in. I've been averaging down on my position over the last couple of months, and as you can see by the chart here, over the past 6 months this company has been downtrending, very similar to a lot of the companies we follow on this channel, and realistically the market in general, as we've started to hear and see more concerns about inflation, the recession, and I think this really is presenting a great buying opportunity for anyone who wants exposure to the plant-based food category. And we're going to talk about that a little bit later in today's presentation. Eat Well Group represents a diversified portfolio with exposure to this plant-based food sector. Now, equally important, you can see in the top news article here, Eat Well Group just came out with their Q2 results for 2022 with record revenue and profitability for the company's portfolio. So that's going to be the main event here, and that's what we're going to be discussing in detail during today's presentation. Now, before we get into that, I did want to quickly stop at the company website. I'll leave a link in the video description below for anyone who's new to this ticker or this company. And as you can see here, they're really a plant-based foods investment company focused on agribusiness, food tech, and CPG brands. And we're actually going to take a look at how that portfolio stacks up or is laid out after the Q2 financial results. Now, in addition to the diversified portfolio you're getting with Eat Well, the other thing I really like about this company is their vertical integration strategy or investment approach. So the team has really set out to invest and acquire companies all with this plant-based foods focus. Again, they've got a number of these already within their portfolio. And on top of that, they're continuing to evaluate new investment opportunities, including, and I should mention not limited to, precision fermentation, regenerative agriculture, and really any other business units that would fold nicely or complement their existing portfolio. Eat Well Group offers the opportunity to invest in the entire plant-based food supply chain from what they call seed to market, not just a single brand or a single piece within that plant-based food value chain. So again, for me as an investor in this company, that's crucially important, something I really like about Eat Well Group, and a great way that they've differentiated this company from some of the other competitors in this space, which we're going to actually look at towards the end of today's presentation. And for frame of reference here, you guys, if you continue to scroll down, you can see the various different business units within this vertically integrated portfolio. So they've got their agribusiness investments, which includes Belle Pulses. They've got their food tech investment, which includes Sapientia. They've got their consumer packaged goods or CPG brands, which are the consumer facing brands, which include a new baby food line, which I'm really excited about, and their media investments, which combined represent over 2.4 million social media followers and 80 million monthly impressions across these various different channels. So a lot to be excited about here, and with that being said, now we're going to move into the big news, you guys. Q2 results for 2022, including record revenue and profitability for the Eat Well company portfolio. So a number of highlights I wanted to talk about in today's presentation. We'll come back and we'll talk about these subsequent events or things that happened after quarter end in a second here. But in terms of the portfolio highlights, you guys, Belle Pulses, so they're 100% owned by Eat Well Group, recorded record revenue of $15.2 million for the 3-month period ending May 31st, so Q2. That's compared to $14.2 million in 2021, so a year-over-year comp, representing a 7% increase in revenue. So this is their pulse processing division, Belle Pulses. And they attribute that improvement to the normalization of market dynamics after the COVID-19 pandemic. So this is a trend I would expect to continue to see moving forward. Belle Pulse has also recorded record gross profit of just north of $2 million compared to only 1.27 in 2021. So this is a 59.6% increase in gross profit, and really attributed to the product mix. They're now favoring higher margin items within their emerging products portfolio and pricing favorability on certain pea varieties, which are the input of that business. And then as a result of that record gross profit, they also were able to achieve record net earnings just shy of $1.4 million. So it came in at $1.37 million for the 3-month period, or Q2, and this is compared to only $346,000 in 2021. So this is a number that really caught my attention, you guys. 296% increase year over year in terms of the net earnings for the Belle Pulses division. And really, there's a number of macro factors or global factors, including severe droughts, global conflict, climate change, and the increased price parity of plant-based foods compared to traditional meat-based proteins that are really just marking the beginning of Belle Pulse's record performance. So a number of things, again, to be excited about in terms of near-term and longer-term catalysts for this business unit. And one of the reasons I think Eat Well Group is such an attractive investment, especially at this point in time. Now, we initially started covering this company when shares were trading just north of $1 Canadian. So if you like this company at $1, you guys, or 50 cents, you should absolutely love it at today's current price, which again is currently sitting in the 22 to 23 cent Canadian range. Now, in terms of the other business units here, so Amara Organic Foods, this is their majority owned CPG or consumer packaged goods division, is one of the fastest growing baby food brands in America. My toddler absolutely loves their organic smoothie melts. Here's a look at those products right there, you guys. So if you see these in stores, I would definitely encourage you to take a look and actually try these out for yourself. So Amara Organic Foods, the premium baby food brand, again, one of the fastest growing baby food brands in North America and the 5th fastest growing DTC company in America by Business Insider. So definitely starting to grab a lot of people's attention and the eyes of many investors. They're now scaling their club channel, which is going to double their distribution footprint from 28 to 56 clubs, as well as increasing their e-commerce performance and availability. So they were up 76% from Q1 to Q2 of 2022. So sequential quarter over quarter growth. And in addition to that, they relaunched their website and they increased what's known as AOV, or average order volume, by 31% through this optimized merchandising. So a number of key strides that the team at Amara has made. And again, this is a majority owned portfolio company within the Eat Well Group portfolio. Now, Sapientia is their food tech division. They've now got some initial products in stores. So you can see they're gaining distribution agreements at Federated Co-op stores, with approval granted to now expand to 350 to 550 more convenience stores in Q3. So really starting to get more and more points of distribution. And that's going to take their total store count up to 700 to 900 points of distribution. And the team is now moving ahead in terms of their R&D and pipeline development for pet treats and a new form of kids' household snacks. So continuing to progress and push the limits there, adding new SKUs and new products to the company's portfolio. And you can see a look at their initial product here. So these are what's known as Protein Twist, you guys, Sapientia's first product launch. However, that's just scratching the surface, and you can see their product pipeline is deep here. They're looking at meat alternative snacks, plant-based pet treats, which we just talked about, plant-based protein pastas, and plant-based crackers. So really expanding to take advantage of all different facets of the global snack food market. And with that being said, if we look at the consolidated view of the first 6 months or first half of 2022, so this is May 31st, 2022, you can see revenue just north of $26 million, gross profit at $3.95 million, expenses came in at $1.38 million, so those are actually down year over year, which is great to see cost control and discipline from the management team, and net earnings coming in at $2.57 million compared to only $391,000 in the first 6 months of last year. So in my opinion, you guys, a fantastic quarter and start to the year for the team at Eat Well Group, and that's really echoed by the company's president and CEO, Mark Anid, as he goes on to say, Belle Pulse's performance is exceeding expectations. We remain very pleased with the growth rate and strong ability to execute from Tony and Francis Gaudet as they continue to lead Belle Pulses. The team delivered record revenue and record gross profit as they fulfill their mission to feed families globally, while our CPG investments continue to scale rapidly across channels. I'm confident we are on the right path, and the market will appreciate how robust Eat Well Group's portfolio of companies are becoming. Furthermore, food security has become a major concern around the world, from severe weather to disrupted supply chains and global conflicts, making our investment thesis more timely than ever. Real food right now is what the world needs, and that's what Eat Well's portfolio companies are supplying every week. We are incredibly excited for where we are headed and expect the management teams to continue ramping up well into the future. So very optimistic outlook here, you guys. Very strong comments from the CEO himself, and really something to get materially excited about if you're invested in this company or thinking about making an investment into Eat Well Group. Now, with that being said, and before I let you guys go, I wanted to jump over to the investor presentation and just show how this company is set up. So you can see Eat Well Group at the top of the portfolio here. They then have three different subsidiaries. So the agribusiness division or seed division, the food tech division, science division, and the CPG or market division. And within these various three different divisions, that's where they actually have these different companies referred to in the Q2 results. So you can see Belle Pulses, their pulse processing is within the agribusiness, Sapientia Technology is within food tech, and nested under the CPG division is the Amara Kids Foods and Snacks, which we referenced earlier, and the Eat Well plant-based alternatives. So that's going to be things like those protein twists that we talked about a little bit earlier in today's presentation. And as mentioned in the intro, Eat Well Group is continuing to look for new opportunities to add to this overall portfolio. Now, to end out today's video, obviously a ton of things to be excited about. I wanted to quickly pull up this slide here that talks about some of the comparable companies in the plant-based food sector. And as you can see here, Eat Well Group stacks up very favorably. We've covered a number of these companies on the channel, so Beyond Meat, Oatly Group, Tattooed Chef, the Very Good Food Company. Here you can see their enterprise value, their expected revenue for 2022, along with their trailing revenue from 2021. And one of the key metrics I'm looking at here, enterprise value to expected 2022 revenue. And as you can see, you guys, the group average is a 4.6 times multiple, meaning their current enterprise value is 4.5 times their expected revenue for the current fiscal year, whereas Eat Well Group is currently sitting below 1 at 0.9 times. So again, really speaking to the investment opportunity here, especially with the share pullback we've seen over the last couple of months, you guys, I think this is a golden opportunity if you're looking for exposure to the plant-based food sector. Now, the final thing I wanted to pull up here is under their share capitalization and financial forecast. And this number, you guys, is extremely reassuring. So you can see insiders, management, and strategic investors now account for over 69% of the total shares outstanding of Eat Well Group. So we've talked about this a number of times on the channel. It's crucially important with these smaller cap type of companies to see that the management team and insiders are putting money where their mouth is. And as you can see here, you guys, nearly 70% or 7 out of every 10 shares are held by insiders, management, and these strategic investors, which gives me a huge vote of confidence that the leadership team believes in this company, they believe in the long-term vision, and they believe in the viability of this business model. So with that being said, you guys, I'd be super curious to hear your thoughts in the comment section below. Are you currently holding shares of Eat Well Group? What do you think about their Q2 numbers, and how do they stack up to some of these other companies we've talked about previously on the channel? If you're still watching the video at this point in time, hopefully you found some value, so make sure you hit the like button for me. It's a huge help to myself and the channel. And if you're not currently subscribed, feel free to do so. The community is growing. We're at nearly 7,000 subscribers, which is absolutely mind-blowing. So I thank you all for your participation, your comments, and supporting these videos. And with that being said, have a great rest of your day. Thanks so much for watching, and we'll see you in the next video.